To the market, the Nigerian equity market continues its moderate ascent in early trade today. The NSE All Share Index is currently up about 0.1% at 36,186 points. Total volumes in early trade is around 38 million units. The early gainers include Oando, which has gained 49 kobo so far. Other gainers include Zenith Bank, for FBN Holdings, of course. In line with that news, some investors taking that as a signal that FBN will, of course, be spreading its tentacles across Africa. And while the laggards include Nestle Nigeria, Union Bank, Just International Breweries, and Wapik Insurance. For more on ongoing trade, I'm now joined by Roslyn Oluyide, a senior associate at BGL Securities. Roslyn, thank you very much for joining us. What's your take on the volumes that we're seeing right now? I think they picked up a little bit yesterday, but do you get a sense that volumes are likely to pick up as we move closer to that Q3 earnings season?
Yeah, you are right. Basically, yesterday, market has been anticipatory of MPC meeting. So we saw cautious trading yesterday and the day before. Aftermath of that, we are also saddled with this consolidated discount outside that. So basically, it's still a wait-and-see approach. Well, what we are looking at now is investors looking at selective stocks that they can take position on. One, to protect value, and then income growth stocks. So that's what we are looking at now.
You just mentioned the consolidated discount house news. Of course, we know Express Discount House also had issues. Do you get a sense that the banking sector is something that investors are a little more cautious about in the light of some of that news that we are hearing?
Yes, I think for now information is still easy about the impact it's going to have, particularly on those banks that make up the shareholding of CDL. But what we are looking at is now for those particular stocks, except for FBN, because of the factor that you mentioned earlier, most of them are trading down. Until facts emerge as to the impact, I think cautious is the watchword for banking stocks for now.
Of course, some banks would be exposed to those discount houses, but it's a little early to say the impact. Of course, for some lending that they would have made to those discount houses should be secured. So, like I mentioned, it's really tough to tell the impact on individual stocks. But let's stick with that news around First Bank and your thoughts about what this could mean for First Bank. First Bank spreading its tentacles across Africa. A deal with a Ghanaian bank seems to be imminent. Your thoughts on this?
Well, my thought on that is that the emerging market is even for investors. People are looking at Africa, the sub-Saharan Africa. So any bank in Nigeria that is spreading its tentacles is going to have a bite of that upward trend, which I think First Bank is latching on. Don't forget that UBA is already widespread in Africa, and then we are seeing the impact on their earnings, because majorly you find out that many of these diaspora subsidiaries are the one impacting on the bottom line. So I think that is incentive then there for Africa subsidiaries.
Absolutely. Okay, let's move on back to the market. Where do you see value in the market right now? Do you still like some banks, or is it more of the cement companies? Of course, everybody seems to like Dangote cement. So which stocks do you like right now?
For now, there's flight to safety by investors. They are looking at high cap defensive stocks. They'll be able to preserve capital, and then so they are looking at high yield and the like of Nestle, Nigerian Breweries. Don't forget that before now they've been slightly overpriced, but because they are value preventing, they still prefer that one more to banking stocks, which unfortunately contribute about 46% of the total market capitalization. So for now, until the Q3 expectation of Q3 will be coming out, which will further validate the effect of the monetary policies and then the CDL, I think they'll be cautious until that expectation. So I see investors moving to high cap defensive stocks for now.
But what's the sentiment for those companies that are invested in the power sector? I'm talking about Transcorp, Forte Oil.
For now, there's a heavy sell pressure on Transcorp, basically because of the right that has been credited. But I still see value in Transcorp because, like I said earlier in other interview, number one, Transcorp was oversubscribed, I think, by 33%. So the return money will go back to that sector because of the perception of investors in Transcorp.
Right.
But what you are saying now is because of sell pressure, people are selling, they're already in the money at 145 kobo. So a stock that you bought at 1 naira price, they are still in the money, so they are selling. But I think value will return to Transcorp, and I want to take a down sugar.
What's the latest news on the market making program of the NSE? Of course, we know that was launched about a year ago, so we had a year to assess how it's working without securities lending. And any updates on when securities lending will come into the picture?
Well, it's hard to say now, except maybe NSE would like to come up. But I know that tremendous progress has been made in that line concerning security lending. Talks have been held with AMCON for them to be able to, lend them to market makers. So by and large, I want to believe that end of quarter this year or first quarter, we are likely to see. And don't forget that the new trading platform has really given a leverage to market makers. So I believe there will be opportunity for market makers at this time, particularly in the new trading platform that is coming up.
Right, you just mentioned the new trading platform. Of course, we know that is planned to be launched on Monday. And how ready do you think stockbrokers are to welcome this new technology? Many people calling this a revolution in Nigeria's capital market.
Well, I must give it to the NSE of management that the whole of September will be dedicated to a series of market readiness tests, and I think the market is ready. This Friday, there's going to be a parallel run, and then we'll go live date will be on Monday. So we are going to use the whole of weekend to really test any ECOP that might likely be, normally in any change that you are embarking on. But I think the market is ready. Brokers are really abreast of the development, and the new trading platform really offers opportunity, particularly the capability of brokers to be able to, latch on to the extreme from their mobile devices. So for me, it's a major plus, and then it offers a lot of transparency to the market because you get data real life, real time online. Right. So it brings a lot of transparency, and I think it brings the desired effect to local investors to come back to the market.
All right, Rosalind, usually when you talk about the market catalyst, you're looking at earnings, you're looking at economic data. Do you think this system could be a catalyst of some sort? Because like you mentioned, a lot more people will have access to the trading platform because it's going to be web-based to some extent. So your thoughts about what this could mean for the market in Q4?
Yeah, in Q4, what we are likely to see is many investors, particularly the local, for now, what we have been clamoring for is a return of local investors to the market so that it's not being taken over by foreign investors. So we are going to see a lot of transparency. People will now be able to take decision, on time, contact their analysts, and then they'll be able to see volume returning to the market. Because don't forget that we also market vendors that will be able to launch. So you are going to have a lot of information, and don't forget, information drives the market. So I agree with me, Q4, we are going to see tremendous activity, volume, and value in the market coming this Q4.
And what could that mean for the index? Do you think we're likely to end the year higher than we are? We're up about 28% right now.
Well, a lot of factors will go into that, but I want to believe that we end the year positive. A lot of factors, because don't forget that it's still being foreign dominated, and then our foreign clients, they still have a lot of issues to settle in their own country. The government shutdown threat is still there. That is why we have not seen a return of the foreign client in spite of the tapering quantitative easing that was not taken part. So by Q4, again, because of the earnings, we are likely to see closing positive higher than 36,000 that are presently hovering around.
All right, Rosalind, get ready for that launch of the XGen platform. We will be tracking that, and of course, we hope that it will make that impact that a lot of people are suggesting that it could make.